morning. I'm Pete Seyler, and this is Markets in a Minute for the week of July 27th. Equity and bond markets continued to see volatility last week, fueled by concerns over escalation in the Middle East and renewed skepticism over AI investment returns. We got our first glimpse at Q2 earnings for the Mag 7 names on Wednesday after the bell, and as we saw in trading on Thursday, investors were not particularly thrilled with the results. Despite Alphabet reporting strong growth on the top and bottom line and impressive results from their cloud unit, the stock fell by as much as 7.5% in Thursday trading session before rallying a bit on some apparent dip buying later in the day. The largest concern revolved around an increase in their CapEx spending plans, which rose $15 billion for 2026, pushing their total spend upwards of $200 billion. Scary territory, as it was referred to by some analysts. While this didn't impact earnings, we saw a clear negative impact on their free cash flow for the quarter, which for the first time in the company's history turned negative. This is a concern that we've established and addressed multiple times over the last 6 months or so. That concern being that with all of this spending on the AI build-out for many of these hyperscalers, investors have yet to see a meaningful return on these investments. If this continues, it could start to weigh on future earnings and inevitably start to pressure valuations lower. This will be a hot topic for the week ahead as well, with Apple and Amazon reporting after the bell on Wednesday. Now, on the fixed income front, Treasury sold off for much of the week as escalation in the Middle East and rising oil prices restoked inflation fears. The 10-year hit a fresh year-to-date high in Thursday's trading session before seeing a bit of relief on Friday. We also saw some interesting movement in the Fed funds futures market. As of Friday, investors were placing roughly a 33% probability on a hike at next week's FOMC meeting, with 100% probability of at least one hike by the September meeting. Will we see a hike next week? At this point, it still appears to be a relatively low probability event, especially with the last inflation report looking encouraging. However, if we do see the Iran conflict continue to drag on and pressure prices for goods outside of the energy sector, September could very well be on the table. We're already seeing indications of this with a new blockade of Saudi Arabian oil exports, which is adding upwards of 9 days to the global transportation timeline. This has the potential to further pressure consumer prices as it drives up overall transportation costs. Now, looking at this week ahead, there's going to be a lot to keep an eye on, particularly around the middle of the week. As I mentioned already, we have some key Mag 7 earnings reports on Wednesday. We'll also get the FOMC rate decision and press conference midday on Wednesday. And then Thursday, we'll get our first look at Q2 GDP, as well as June PCE data. That'll do it for this week. If you enjoyed the video, hit the like button, share it with a colleague, and don't forget to hit subscribe. Thanks for watching, and we'll see you next week.